I think that if you're a short-term macro trader, like you're thinking in terms of hours or days or even weeks, you're really concerned. But I think that if you have a time frame of 4 to 10 years, I think there's a different question, which is why are the interest rates going up, and what is the macroeconomic environment? And I would say you probably shouldn't even buy Bitcoin if your time horizon is less than 4 years, because you're a trader. And if you're a trader, you're probably not going to care about anything that I have to say. You're just looking at whether it's correlated or uncorrelated and throwing lots of money around without thinking about it. I think if you're really a deep thinker or a macroeconomic investor, the bigger issue is we have monetary inflation. The money supply or the currency supply is expanding.
Crypto markets are getting smashed all across the board, with Bitcoin hitting new lows, falling into the mid-20,000s, and Ethereum plus many other altcoins down 35% or more. With investors everywhere beginning to panic, one investor feeling perhaps the most pain of all is notorious Bitcoin Bull Michael Saylor, who is now down billions of dollars on his massive Bitcoin position. In his latest interview, Saylor reacts to the market collapse and explains what his strategy is moving forward. Make sure to stick around to the end of the video, where I will unpack the main driving force behind this collapsing crypto markets, as well as Saylor explaining the only scenario he would be forced to sell in. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
I think the news today in Turkey was 70% inflation in Turkish lira. We probably got something in the range of 15 to 20% currency inflation in the US dollar and the euro. We've got 40% inflation in like an Argentine peso or more. So what you have is an inflationary environment. We know the CPI, which is a manipulated measure of inflation. It's actually the lowest inflation that one could reasonably measure, I think. It's like 7.5%, 6.5%, 7%, 8% in the US and Europe. And these are 40-year highs. So the CPI is 8%, but the actual asset inflation rate is double to triple that. So the reason that interest rates are going up is because there's pressure on the central banks to get inflation under control. And their one tool to do it is to raise interest rates. But they're not going to stop the inflation, because the inflation is caused by excessive money printing, budget deficits, and the wars and political policies, domestic and foreign policies, and these policies continue. So given the fact that we have an expansive currency environment, and what you can see is the price of food and energy and scarce resources keeps going up, the question really is, if I have some money, what should I invest in? And the answer is you don't want to hold currency, because the currency is collapsing in value. You know, the US dollar's lost 99.7% of its value over 90 years. I mean, and that's the winner. The losers are losing 99.9% of their value over 100 years. So the currencies are all collapsing. So I don't want to hold the currency. I don't want to hold bonds, because bonds are currency derivatives. I'm going to you're going to give me $1 million, and I'm going to give you interest on the $1 million at 3% for 30 years. And I'll give you the $1 million back. And in 30 years, the dollars will buy 10% of what they buy right now. So that's even worse. You don't want to hold a value stock that it's valued on cash flows, because if a stock is valued on cash flows without growth, it looks just like a bond. Right? It might be slightly better than a bond, but if the currency is losing 10% of its value a year, and you can't raise your cash flows or raise your prices, you have to increase your cash flows 10% a year to offset a 10% currency collapse, right? So when the currency is collapsing at 70% a year, like Turkey, the company you own has to raise its prices in Turkish lira 70%, you have to raise your prices by an amount such that your cash flows would increase by 70% so that you hold parity in value. So equities are currency derivatives, partial currency derivatives. Bonds are almost complete currency derivatives. Commercial real estate is a partial currency derivative. The currency is currency derivative, right? It's a full currency derivative. So what do I own? And the answer is, I want to own scarce property. scarce desirable property. What is it that you own that an affluent, intelligent person will want to buy from you in a decade? That's the question you have to ask yourself. So if you're owning things that will last a decade, right? I mean, if you buy a car that's not going to last a decade, it's not really an asset, it's depreciating. But maybe you own a sports team or a Picasso painting. I don't know. Will people want to buy gold from you in a decade? Will they want to own the building that you own in a decade, right? Will they want to own the intellectual property rights? Well, it all depends. Bitcoin is scarce desirable asset because it represents digital property. If I own $1 million worth of buildings in Moscow in a decade, who's going to want to buy them from me? Presumably affluent, intelligent Russians. But will an affluent, intelligent British person or Chinese business person or American want to own that asset? The same is true. You own $1 million worth of buildings in Nigeria. Who's going to want to buy them in 10 years? Who's going to want to buy what you own? If you own $1 million worth of Argentine pesos for the next 10 years, they're going to be worth $10,000, right? So you're not going to want to own that, but owning $1 million worth of buildings in Buenos Aires is only going to appeal to someone that wants to live and work or use that real estate in Buenos Aires, and you're going to pay the tax and the maintenance cost in between now and then. So interest rates are going up because there's macroeconomic headwinds blowing. The real problem is inflation. If inflation's running 20% and the interest rates go to 2%, they're not going to stop the problem of currency collapse. They're just going to create a near-term turbulence. And if you're a trader, you may get caught in that turbulence. But ultimately, if you're an investor and you're concerned about preserving your wealth to give to your children or your grandchildren, then whenever you're in an inflationary environment, your strategy is simple. I have to convert my weak currency into a strong currency. Ideally, convert my weak property into strong property. And that strong property, I want to move out of the country. I want to move it out of the jurisdiction of a politician that may confiscate it or tax it away, right? And that's why, converting $1 million of pesos into $1 million of dollars in Buenos Aires won't help you, because eventually the politicians will freeze your bank accounts, convert it back into pesos, and devalue it 20 to 1. That won't help. Right? Converting $1 million of pesos into $1 million of dollars and then buying $1 million worth of big tech stocks in the US may be a better idea. If the big tech stocks are monopolies, they'll be able to raise their prices, hold their cash flows, and hold value. Monopolies will be fine, right? What is a monopoly? It's scarce, desirable property. If I offered you a monopoly with unfettered ability to change the price of something that, like oxygen, sell oxygen to New York City, you're probably going to do okay, right? The problem with even monopolies, though, is over time, monopolies get regulated, right? Like in theory, the richest person ought to be the person that sells water in New York City, but they're not the richest person, because the New Yorkers get together and they decide that they don't want the water company to raise the price of water to $100 a gallon, even though you'd pay it if you were thirsty. So what can I buy that's going to hold its value over time that represents scarce, desirable property? Not just scarce, because there's a lot of things that are scarce that aren't desirable, right? Scarce, desirable property. And I think one of the obvious things is digital property, right? If I created a city in cyberspace with 21 million blocks and nobody could make any more, and it was going to last for 1,000 years, and it was the dominant city and everyone wanted to live there, would you want to own one of those blocks? And I think the answer is yeah. And that city is called Bitcoin. Let's say you have $1 billion on your treasury as a company or a country. If you store that money in US sovereign debt and you're holding $1 billion of T-bills, and if the US currency is inflating at 18% a year, that means every 4 years you lose half your money. Okay, so another way to say it is it's costing you $180 million a year, or it's costing your citizens $180 million a year to use that as your reserve asset. And it will cost them $500 million in 4 years. And it will cost them $750 million in the 10 year or in the 8 years. So it's very expensive to use a depreciating currency as a reserve asset, right? It's so expensive that in essence, it impoverishes you. For example, my company had $500 million of cash, and we were generating $100 million in cash flow a year. Well, when the inflation rate gets to 15%, then you're losing $75 million in wealth on your treasury in the same year that you're generating $100 million in cash flow. If you have to pay tax on that cash flow, you have $75 million after tax, and you have a $75 million loss. So that means that a profitable company working as hard as they can, doing 100,000 things right every year, makes no progress. When the inflation rate doubles to 30% or 25%, you're actually getting poorer working as hard as you can. So another way to say this is the road to serfdom is working exponentially harder for a currency growing exponentially weaker. You want to take the extreme. Imagine yourself working as hard as you can in Argentina while the currency is losing 40% of its value a year. What you can see is it's utterly hopeless and impossible no matter how hard you work. You have to work 40% harder per year to stay the same, right? Impossible, right? So the reason that a country or a company would want to switch to a Bitcoin standard from the US dollar standard for your treasury asset is because instead of losing $20 billion a year, they would be accreting or making $20 billion a year because they picked the right asset to store their economic wealth in. You take a country like China. If China's holding $1 trillion worth of US debt and the US inflates the money supply by 20%, the Chinese people pay $200 billion for that privilege. In fact, they're probably holding 3x that much debt. So the US is in essence exporting inflation that costs the Chinese $600 billion a year, every year. Okay. It's a pretty profound idea. Now you could call it security, like maybe the US's greatest export is security. People pay us hundreds of billions of dollars a year for the privilege of using our currency as a reserve asset and using our banking system. But, you know, if you're a country and your citizens are working as hard as they can, like maybe I'm basically shipping oil. If I ship $100 billion of oil and I export it every year, but I lose $100 billion by holding the US debt, I'm in essence selling my oil for nothing, impoverishing myself. And so why would you switch? Well, because if I told you everything you do the rest of your life is going to be worth nothing, or you could switch your savings technology and everything you did in the rest of your life would be worth a lot and your children could live a comfortable life, which of the two strategies would you choose?
So there's Saylor explaining why in a situation like this, panicking is the worst thing you can do, with adopting a long-term multi-year investment time horizon being the best strategy. Bitcoin, along with the crypto market, has always recovered to new highs. Do you think this time is any different? Now, to show what was one of the main driving factors behind the collapse in price of Bitcoin is some data out from Bitcoin analyst Will Clement. A huge downward pressure on the Bitcoin price was the collapse of the Terra algorithmic stablecoin, which had over 80,000 Bitcoin used in backing. What we witnessed over the last 3 days was essentially a modern day crypto bank run, with Terra having to sell out of their entire Bitcoin stack to attempt to maintain the stablecoin peg. This, however, led to a downward death spiral, with Terra eventually selling out of their entire entire billion-dollar Bitcoin position in an attempt to regain the peg, which they were unable to do. The only good news out of this is at least they are out of Bitcoin to sell, so a huge downward pressure on the BTC price has now ended. In other news, Michael Saylor outlined on Twitter that his company, MicroStrategy, needs to maintain $401 million for collateral on their loans. For Saylor to be forced to sell out of his position, Bitcoin would have to fall below $3,562 and the company would have to be unable to post collateral in any other form. The likelihood of this is extremely unlikely, however I do admire the complete transparency of Saylor and his company's balance sheet. Anyway guys, hope you enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, have a great day.